All right, in this video, I'm going to talk briefly about a few premium variables that affect the costs of long-term care insurance. So variables that will influence the premiums. The first one would be age and also gender associated with that. So age, basically, the older you get, the more costly the long-term care insurance is going to get because there's a higher probability that the person purchasing the policy is going to need the long-term care insurance in the near future. So the older the person gets, the more expensive the long-term care insurance policy is going to be. And gender, statistically speaking, women do live longer than men, so there is some possibilities associated with that, leading to possibly some uh, longer periods of long-term care needs and things like that, possibly. So premiums will vary based on gender and also age. The benefits specified in the policy, I mean, this is sort of an obvious one, but policies that are going to pay out more in terms of benefits are going to cost more. And the policies that are going to pay out less in benefits will cost less typically. So the level of benefits specified will affect the amount of premiums that are being paid. Health characteristics of the person being insured. So the more healthy the person is, the better the family history from a health standpoint. The physiological age has been mentioned in kind of underwriting policy features as well. Basically, same thing kind of applies here. The better the health, the lower the premiums. Geographical location, long-term care is going to cost different amounts in different geographical locations. And so that could affect things as well. Elimination periods. So if the policy has a longer elimination period in which it doesn't start paying benefits unless the person has been in a long-term care facility for or is receiving long-term care for a longer period of time, then that policy would typically be less expensive. If there's a shorter elimination period, it's typically going to be more expensive. If depending on the type of inflation protection the policy has, that will also affect the cost. So the better the inflation protections, the more expensive the cost of the policy. And there could be various other riders, provisions that are tacked onto the policy as well. And depending upon the nature of the riders that are tacked on, that will have an impact upon the policy premiums as well. So there are a lot of different sort of variables that can affect the premiums associated with the long-term care insurance policy. But those are a few, and hopefully it gives you a little bit of an idea and an overview of how they work. And hopefully it's been helpful. Thank you for watching and have a great day.